Can you hear me?
Can hear it. We can hear you now, or I can.
Awesome.
Yes, we can.
That's great. That's great. I feel like I've been talking to myself for the last minute.
Oh, you were. I just started being able to hear you.
Okay, I think we have a few people that are still joining. I usually like to start these with a quick round of introductions. So would you like to go first, Voy Network?
Hello, everybody. Thank you so much for waking up early for me, at least. Boy, I'm on the East Coast on 4th of July, and excited to be here.
Happy 4th of
But
July.
yeah, my name is Chris Winter, and I am one of the co-founders of Void Network. I personally have had a long run of being in crypto. I started collecting in crypto in 2013. But I've been running companies full time in crypto since early 2017. I raised over $17 million spread across quite a few different companies, ranging pretty much from everything. But I've seen it all. I've really done as much as I possibly could. Voy itself is my current focus. What Voy is it's a layer one network that a bunch of us crypto enthusiast people have been in crypto for a long time. We're really sick of the existing economics, existing distribution of blockchains, and through our research, we deemed that the existing L1s were not sustainable the way that they actually were. And not only that, but it was a fair that all of the people that were there during like the downturn in 2022 that were putting the effort in didn't actually own much of the chains at all, and it was only adding value to those early adopters. So Void Network's job was to actually fix that, build a network where the people that were actually putting value into the network were the ones that actually owned the network. And we've been extremely successful so far. We're been in testnet since now October of 2023, and showing extreme growth. We have over 2,500 nodes. We have a amazing builder community that built multiple AMMs, multiple wallets, multiple NFT like structures, marketplaces, and launch pads. And yeah, and we're here to answer any questions about fundraising.
Again, talking to myself. Awesome. Thank you for that. Um, Adam, would you like to go ahead?
Yeah, sure. Hi, Nish. Hi, everybody. It's evening here in Australia, so got very early and good evening. But happy 4th of July to everybody that's in the US as well. A little bit about me: CEO and founder of Cora. We provide rug-proof certification, insurance protection over RWAs, the tokenized digital certificates. Been in the space, in the crypto space for a while. Had a lot of companies. Set up and closed, exited out a few, had my first big exit at 30. And yeah, just like happy to share the stories, the war stories and the journeys, and just also, what to look for and how to better improve your odds of attracting the right VC, because not all money is good money. And I think that's really important to understand, because it's like a relationship, it's a marriage, and you want to have that for the long term. So excited to see where the journey goes and the questions come, and yeah, be on this panel. So thank you.
Awesome. Thanks for that. And yeah, definitely about choosing the right VC. I think we spoke about that during the last episode. So it's nice to have you guys back. Moongate, would you like to go ahead and introduce yourself?
Hey, it's calling in behind the account here at Moongate, as well as part of the team. I'm also calling in from the East Coast. So good morning to everyone that's here on my side of the world. A little bit of background on Moongate. Moongate is a platform that enables brands to connect with people by rewarding them with smart tokens for activities like attending events or interacting online with brands. If you've been around the space for a while, you probably had the chance to use our platform at a couple of Web3 conferences somewhere around the world. Recently, we completed a seed round around spring this year, and I myself have had a few other experiences fundraising in and outside of the Web3 space. So excited to share some of our experiences and to be part of the discussion here today.
Awesome. Well, glad to have you here as well. And Sergio?
Yes, of course. So good afternoon, everyone, for whoever is on the European time zone. Thanks for having me. So I'm Sergio. I've been in crypto, Web3, blockchain industry, and depending on what is the terms that we prefer to describe it, since 2014. I have spent quite a bit of time in between as a former regulator as well, which has been quite an interesting experience. I was leading up the blockchain authority back in the Republic of San Marino. And during 2017, if you want, on the hype of ICOs, we were trying to frame a legislative framework to somehow support and enable the industry to do stuff in a protected and somehow structured environment, avoiding risk in terms of compliance and anything around like the difficult part that we always have to face. To 20, go back in the private industry. I started building in music. We found the public pressure. And we founded the Web Free Music Association, which today I'm president and CEO, which is working with major labels and IP rights owner on the music side. And then we contributed, created, launch a music protocol, which is the blockchain designed to tokenize music intellectual property. Most of the work that we're doing today is contributed to the real world asset tokenization narrative. So looking pretty much at economic rights, cash flow tokenization. So it's very, if you want, financial driven and investment driven, the narrative. We've been somehow raising as a project during the bear market. We believe we are one of those ones that managed to somehow get the funding, build in the bear market, and we're about to go out with the token and go very early with the community. So very excited about debating all the topics during the space. We're going to try to bring very much a community retail view because this is the one that we prefer more than VCs.
I love that. And thanks for joining us today. Really nice to meet you. And finally, we have Nadma.
Hey, everyone. Thank you so much for the
Am I
intro as
saying
well.
that right?
Yes, it's
Okay.
correct, Nadma. Yeah, so I'm Thomas. I'm one of the co-founders of Nadma. We've been operating for just over 12 months now. It's my third consultancy company, but Nadma is much more focused on incubating and consulting companies in terms of their fundamentals. We do a lot of fundraising. We have a network of just over 180 VCs that we work with very closely, and we also co-invest with those into our portfolio of projects. We're fully Dubai based, but we're currently operating with just over 20 projects at the moment that we're working with. But we're very, very interested in the fundraising space. We're always looking at the markets, always looking at how it changes and really adapts to the different projects and these hype cycles that we've seen over the past few years. So very interested to kind of get some different perspectives on this space and see how we can also really give something towards all of you guys in terms of maybe helping you fundraise or helping to get fundraising in the future.
That's awesome. I do see someone that I recognize, but they're not on the space list. So if you guys are okay to have me invite them as a speaker, they're basically called Record. They're a music protocol. Awesome. So I've just sent an invite. But yeah, really nice to have you guys on. Some fantastic bios. So I'm super excited about the space. Now, if you're new here, we've done this. This is now episode 3. And last week, I have to say, is one of the most insightful and interesting little discussions that I had about fundraising, especially during this market. I want to start off. I think, Nadma, this one's for you because you guys do incubate projects. So I want to get your take here. I've been going back and forth with a certain company this past week, and basically they want to launch now. And during our last space, and Voy and Adam will be able to tell you more, but basically we discussed that VCs that want you to launch in the current market conditions are basically just being a bit more selfish. I would love to hear your take on this.
Yeah, I think there's kind of two sides to this because obviously we operate in all three respects. We operate in respects to our clients, which are our projects and our companies. We operate as a VC ourselves, and then we also operate as a third-party VC, so connecting our projects to VCs. And I think in the current market, the problem is kind of looking at it from a perspective of the projects as well. Because at the moment, we've seen a lot of projects delaying their launches. You know, they say we're doing a launch in 1 week, in 2 weeks, in 3 weeks, and then the launch magically disappears again until the next month. And for VCs, that's a very tough thing because that means that they're not getting any ROI for, months or weeks to come. And that therefore, limits the amounts of investments that are actually going out into the market. So this is one of the problems that we've seen recently to why the markets are a little bit dead. Now, from the VC side, it's really interesting that you asked that question because I think a lot of projects feel like VCs at the moment are being a little bit pushy. But I feel like if you're a VC that is pushing projects at the moment to go to market, then you're risking your reputation and the reputation of the projects you work with. Because you're not only not going to be making any money from the tokens that are launching, because they won't do well in this market, regardless of your tokenomics, regardless of the structure you've built. But at the moment, it's just an unsustainable market for projects to be launching. Again, we've all seen this. We're looking towards a recession in 2025. Again, looking at September, October, when majority of the projects will launch. This is just a cycle that we've seen time and time again. But I think it's just a little bit different this time when we look towards how VCs and projects are acting. So I think a few VCs and a few projects, not naming anyone specifically, just need to take a bit of a step back and get a little bit of a reality check in that regard.
That's good to hear. Does anyone have anything to add? If you do, just please feel free to chime in.
Yeah, would love to chip in if I may.
For sure.
Then, by the way, I'm representing Music Protocol. I have this bad habit to somehow always join with my personal account, just for the disclaimer. Their opinion are my own, so it's covered. It's covered. So I think that within the picture that you just described, we are fitting very well because we are launching our liquidity bootstrapping pool next Monday. I woke up this morning with Bitcoin at 57K, and that somehow what we've been debating within the team for a long time. What do? We make a plan, because when you prepare a launch, you have to work for many months. You have to start building marketing relationship. You have to put all the plan into action. It's going to take a lot of time and a lot of energies. And when you delay, one consideration is how far you're going to be capable to either keep on going with the same cash burn for another 1, 2, 3, 4, 6 months, because once you decide to change your plan, it's never a week, it might become a month, because at that point you sit and you want to time the market. And something I learned in crypto is that timing the market is an impossible task. Then the other consideration is that when you look at this situation, it's generally a lot easier to cut through the noise. So this is another interesting angle. Now, if you have a good value proposition, if you can talk to your community, if you got partnership, if your project is solid, effectively, why is that bad to go out to the market and actually ask for the community and the retail to support? And this one opened the door for another argument. I've never been a big fan of VC fundraising in crypto for some reason. What I learned in 2017, or everyone learned in 2017, is that it's a lot easier to raise from a huge number of people than from one VC. So I think the crypto showed the power of the real crowdfunding. I mean, crowdfunding was a trend already pushing across many countries. So the idea that people could support projects very early on, because in the traditional financial markets, when you can buy shares, I mean, all the value creation has happened. So the only position that you have is that you're going to get the institutional investor, the founders, whoever build the company that is going to try to realize the profits now based on your investments. And I think what crypto can do is switch this position and the opposite. So, I mean, that's one of the reasons why we choose the liquidity bootstrapping pool on Fjord, where you have a price discovery. So we said one thing is getting people to buy into the project, into the future, into the value creation that the team is going to be capable to deliver. And another thing could be the valuation. So we said, let's see, we might give up on protecting previous investors. We might give up on, I don't know, fixing the valuation ourselves, which is always the joke of the private sales. You keep on growing, vanity metrics effectively, because until you go out in the market and you get priced in, you will never know whether your funding round is going to be able to stand in terms of community participation and retail participation. So this has been a very difficult, like, strategic conversation that we've done internally, and then we decided to crack on, don't change the date, and go out when we plan to.
That's a really interesting point, I guess, on the project side. And yeah, you can't time the market, but a lot of VCs do argue that it might be a bit safer. So I'm curious to hear people's opinion on that side. And completely correct with the crowdfunding side. I feel like crypto has something so unique in it just based on community. In fact, Voy, I feel like now's a really good time for you to chime in because for those that don't know, Voy is a community-run blockchain network.
Yeah, thank you so much. So I think you actually talked to my other co-founder Benny last week, but the same network for sure.
Yeah.
But yeah, so I've actually raised money on the summers and winters, and it's way easier when the market's up. Obviously, but it's very much more of like the VCs have a choice. They have much more choices now because we're coming out of the bear. Bears for building. A lot of people that were here during the bear have actually been building good products. So there's just so many that are actually looking to raise now that they can really kind of choose and be picky and be kind of selfish with everything. One of the things that we're actually running into is that we're working on doing another round right now. Is that VCs want a lot. They want a big piece. They don't want small pieces, but the issue with them having a big piece is that it destroys your tokenomics. When a protocol is not distributed, you end up having huge issues down the road. And finding the VCs that are willing to take a decent size, but not so much that they become huge whales, is one of the more difficult things that I've been finding.
Completely agree. I do want to hear your take, though, I guess, for the projects and for even the retail investors here. Do you guys feel like it's better to have multiple VCs on your project? And what would be like your ideal ticket size for these? I heard over the last week someone saying that they had a maximum ticket size of 50,000. So I wanted to hear your take.
Well, I think the maximum ticket size really depends on the size of the market cap you're going after, and I don't want to actually disclose any of that specifically right here in the public. But it's way better in my opinion the more that you get, because when you actually start getting the less that you get, then this is actually a mistake or something that was going down the wrong path or I've done in the wrong is going with a one VC for the majority of the round and then filling it with smaller. And what ends up happening then is that they become the whale and they have to actually get profits eventually, and they have to actually sell. And when they sell, it really hurts the overall market. But when you actually go much more distributed, much more smaller percentages to each one, VCs don't become the drivers of the chain, they become part of the community. And that is the big key, is that making sure that VCs don't own the majority of the chain. They own maybe a little bit more than what the rest of the community members. And honestly, the chain itself should be majority owned by the ecosystem, by the people that are putting it in value. Because if you have people that are like just put in early money, their value stops being added and ends up breaking things down. So yeah, it's very important to us that VCs don't come in and buy up huge portions of the market cap. This is one of the reasons why we've actually reserved 75% of the entire market cap for the ecosystem itself, and not only reserve the market cap for the ecosystem, that's through actually a very great governance that Shanti and Benny have been putting through. They actually have control over where those tokens go over the next 20 years as well, and then limiting the amount that investors can potentially actually invest into a small slice of the pie.
I love that. Yeah, that is definitely great advice. I think for any retail investors also, because it's really important for you to take a look at what you guys are getting into. And I think there's some really good insight being given here. So,
like the one more thing to just add on that is that when you reserve that much for the ecosystem, you can't really look at that as like a hit in the market cap, because ideally, theoretically, every time that you those tokens are distributed, they're distributed to people that are adding value to the chain. So it should even out. I mean, in theory, at least.
I completely agree. Completely. I do want to ask though, what are your thoughts about your, I guess, the people that are building on you guys? What are your thoughts about their launches right now as well?
I mean, I can jump on that as well, unless somebody else does. We believe that the people building on us are the stars of the show. The network itself, we're just the platform, and without the ecosystem, without the builders, we aren't anything. So the number one thing is making sure that the builders are actually part owners of the actual chain itself, but also that they are being marketed. The users are being pushed to them. So like when we set up our questing for this incentivized testnet, the main push for the quests are using the underlying applications, and using it in a way that they find out what their missions are, what drives them, why they actually are building it themselves. Because the idea is that when you do a token launch, or you launch in protocol, you need to answer the okay, and now what? It's like, yes, it's one thing to actually go to market and launch on mainnet for the base protocol, but we're also going, actually, when we go in mainnet, at least 10 other applications are going mainnet at the same time, and making sure that they are held high, and those are like the focus, because then eventually they will then release their token shortly after that. It's kind of like a domino effect.
That's really insightful. Thanks for that. I have a question for Moongate. You guys do physical, um, physical call to actions at events, correct?
Yes, we do.
Okay, so will you be in ETHCC?
Yeah. So we're not the ticketing partner for ECC this year, but a couple of our co-founders will be at ECC this year.
Okay, cool. Well, some of our team members are going to be there as well. It would be great, firstly, to catch up and meet in person. But I want to ask on your end as well. Obviously, activations are something that you do see more in a bull market. Some background on me: I do come from agency experience, so I completely understand the different, I guess, marketing that goes on. So I wanted to know, when do you feel like is a perfect time for companies to start investing in these real life activations?
I don't think it's particularly something that might be reserved for bull market. At the end of the day, like what the whole goal of what we're trying to do here is to kind of bridge the gap between Web 2 and Web 3. So we're always like actively working towards promoting real world applications, whether it's a bear market or a bull market.
Awesome. Okay, so I do want to touch on some current events. Are you guys seeing the Germany sell-off that's going on? So I want to know if you guys, what advice you would give to companies right now, because obviously sentiment is a little off. If you don't know, Germany's basically offloaded a couple $1 million, and I'd say a couple $100 million in Bitcoin, basically seized assets. At the same time, a lot of whales are dumping. So what is your investment strategy? What is your trading strategy? What advice would you give to other users? Sergio, would you like to go ahead?
It's a very difficult question. Like today, I'm one of those one that believe like you made your decisions already, so hold on those. I don't see anything catastrophic going on, and I think we need to be. I mean, timing the market is a technical job. I'm not sure how many traders. It's maybe a number game. The traders now it's like going gambling at a casino. You got a few people winning and a lot of people losing. So I'm not a professional trader. I never aim to be one. So I take my decision through a framework which is long term, which believes in the marketing narratives which are driving the market, and then I sit back and I wait for a long time. So either nothing is going to play out, or either this is like short-term noise that shouldn't affect too much decision making. So is what you were saying before. Do the due diligence. You can do it early in the cycle. You can choose your project. You can meet the team. You can understand what's going on. For me, a token effectively is always referring to a network economy. I think this is the concept in Web3. So we are all wondering how the team and the participation in that network economy can grow. Because at the end of the day, the tokens are the way to exchange value, lock transactional value between the counterparties with a lot of like interesting mechanism in terms of staking, reward, incentivization. But at the end of the day, participation to an economy is the basic sort of valuation that should be done. And I think Ethereum, for example, is a proof. We've got so much going on Ethereum compared to a lot of other ecosystems that the question is always who is going to attract more economy and more actors to be able to create value and drive adoption. So, I mean, that would be my advice. I mean, if you take your decision, don't panic. Sit down, believe that you have done your due diligence, and carry on holding your bags in the crypto language.
Thanks for that. Nadma, what's your take on this?
Yeah, I think what Sergio said is very correct. And I think it's also kind of looking at it from a different perspective again, because we're now in a market that is constantly growing, rapidly changing. Everyone's unsure of what's really going to be the next step. And I think that's what people can take advantage of. Because in this time, if I was a project, I would focus on building. I would focus on really getting out there in terms of seeing how you would penetrate the market in the future, how you can penetrate the market now, and really onboarding users to help the market as well. Because I think, deliberating fundraise, deliberating when you're going to launch on exchanges, it's all really going to drive the actual value of the product down. And this is what we've seen in bull and bear markets time and time again. When the bull run comes around, a lot of the smaller projects die and the bigger projects go way up. And then as soon as the bear market hits, all the projects start dying again. And to me, that just speaks to the lack of real value in the space that we have at the moment. And I think if both investors and projects were to focus a bit more on building, it would be a much more resourceful space. And that goes the same for us. Like, Nadma, we never stop building despite the market conditions, just because that's how we believe. We really don't believe that market conditions should have anything to do with your product launch. Like it might change your token price and your exchange liquidity might be a bit lower. But if you can launch a product and attach your token economy and your token utility to that, then in the long term, those will be the projects that really run the industry. So I think it's a big change of perspective will be needed, hopefully, in the next few years as well.
I completely agree with that. I see it all the time with the investments that we get as well. So for those that don't know, basically, we are a community-based VC, but basically what that means is we will either buy in or buy other OTC deals through other agencies, through other VCs, through KOLs, or get into rounds ourselves. And then we kind of distribute those rounds to our community, and we allow them to get in. So it's almost like we'll take the majority of the allocation usually, but we do give the opportunity to our community members to get in. And I have to say, some of the best deals that we have had have actually been over the last couple of weeks. With highly exclusive projects that are raising, ones that normal people just don't have access to. And like you said, it doesn't matter when you launch. It's just about having the right project and the right tech. And Adam, I'm curious with you as well. Are you seeing a slowdown with RWAs?
Yeah, look, it's interesting you say that, and there's two things, or a couple of things, but one is, if you wait for perfect conditions, you get nothing done. So you just got to pull the trigger and, believe in your conviction in your plan and follow through with it. And in the end, it will pay out, and it will come out in the wash. There will be choppy and, but the ocean can't stay rough all the time. So that's there, and I think the sentiment of the panels sort of agreed to that. It's if you stay in your lane, you're going to succeed, and I think that's there. Now, as far as the RWA space, I see it's just accelerating. I've been on a lot of panels in the last couple of days, and just the sentiment and the traction, the way things are moving. There's about to be a lot of real estate and a lot of assets moving on chain, and not just through you know. Black rock that we all hear about and everything else like that. There is other large projects that we are sort of partnering with and, tokenizing real estate, putting that on there, but also connecting with the TradeFi and the DeFi and, ways to fund a whole, a complex or a building, like someone was talking about saying, in Manhattan, getting, collecting that money from the crypto market and using that money to then build. So now developers start to realize that they don't need to go to traditional banks, So it's like, and then again, the other person, the developers are realizing, saying, "Hey, wait a minute, I could actually sell this back to the community as well because there's quite good liquidity floating around there." So in that context, it's really good. I mean, we're in the insurance business. We're in making sure projects are protected and making sure the consumers are protected by making sure those projects are certified and that rug proofing there. But at the same time, it's interesting that it is a downturn, or so to speak, or it's this choppy downturn, but it's actually quite aggressively increasing at a large rate, faster than we anticipated. So yeah, it's very interesting.
That's some really cool stuff with the Manhattan construction as well. I do see a lot of the RWA narrative slowed down now. I think, as we spoke about last time, it has been a little bit clouded with DePIN, and everyone's like, well, what's the difference? So I think it's an interesting space to be in. Definitely still very early. So yeah. Some really cool insight here. Well, I'm going to be ending the space early. I have a little emergency that's just popped up. But I really appreciate your insights here today. And I'll leave the floor open for any final words if you guys would like.
I mean, I'll start it off saying thank you so much for having us again. We really enjoyed it. But for everybody that listen here for fundraising, just like we were just talking about the market going down, but just keep your head up. Build a good product and you will make it. And if you truly believe, this is another reason I tell everybody that is in this space, they should be in the space because they believe in the future of blockchain. It is by far the most important thing because you're going to have your ups and downs, and you need to actually fall back to your passion of the product of the not the product, but of the pain you're trying to actually solve. And when you have that, when things get tough, it's no big deal. But when things are great, high fives all around and champagne. But when things are not, at least love what you're doing.
There's that saying, right? When the going gets tough, the tough get going.
Right.
But yeah, definitely couldn't agree more.
Yeah,
I don't
100%. I couldn't second that. That's exactly it. And it's like, it is a tough journey. You're forever raising and being on both sides of the equation. So, just keeping chin up. That's really important. And again, I would just say it for all of us, like reach out to us, talk to us. We're all been we've all been at the ground level. We've all been through the journey. We're still going through the journey. We're all in the trenches together. And I think it's important as a family. And I say this to me personally, you know, hit me up, DM me, ask me some questions, and I'm happy to share the war stories and cheer you up and try and give you, point in the right direction. If not, I'll give you a list of some people that can help because I think that's important, and that's the biggest thing as founders. But agree with Roy. Believe in what you're doing. You jumped in this space for a reason, so just stick through with it, and you'll see the results.
I agree.
Can I chip in?
For sure.
Yeah, I mean, thanks very much for the invitation. Great being here. Maybe I'll close with a remark that I feel very very much like I got in Web3 because it's a people business. So, I mean, if we believe that when the time gets difficult, the way is to go back to the money managers and basically sell out governance, power, decision making, we're going to just miss out on whatever we are somehow spending our time building. So, I think we are one of those projects that believe in people. So, even though the markets are hard to face, I'm always one that believes that you should be going out there as quickly as possible, be a relationship with the community. Don't go out announcing everything, listing partnership, all your future just to pump the valuation because the only thing that you want to do is making sure that you build a relationship with your supporter. And the earlier you do it, I think the better it is because we're going to be able to somehow build the Web3 ecosystem that we came in. Otherwise, it becomes like the financial market. One of the conversations I've seen recently is how big are the unrealized profits in a lot of cap table. And that's exactly the result. Right? You're going to have a lot of private sales. At some point, the project, which sounds almost a sort of clear bet, a definite bet, that's where it comes to market, and then the retail is going to suffer the dumping, the unlocking, and all the unrealized profits that all these projects are building by keep on raising money from institutional money, I think, which shouldn't govern blockchain. Like, I'm one of those believers that, I mean, they should be there to provide initial capital. They are very important to get project up and running and support founder. But we built a cap table, which I think is 60 VC and 40% community already from the beginning. And I think maybe it's even too high. Like, I would like to see the VC smaller than the community.
I completely agree with that. In fact, on our previous episode, we did speak about how you basically have to marry your VC, or they're just not a good partner for you, and your, I guess your statement really held true to that as well. It's that, either come in for the initial bit, but either way, if they've invested, then they really should take care of you long term. Nadma, is there anything that you would like to add? Or
For
Moongate?
sure. Yeah, sorry, I'll let Moongate go after. So yeah, I think what you guys mentioned is super, super core to our values at NADMA as well. Like, we always believe, that famous quote that your network is your net worth. And that's something that we started off. We started off just as two co-founders, and we built that out with our partners, with our support network of VCs. So, we help them, they help us, and that's always what we believe in. So we always believed we invest into people, not founders, not projects, not hype. We invest into people. We invest our time, our capital, and we find people that do the same thing, and that's what we really drive towards. You can look at all the projects we've worked with, you can look at the events we run. That's our sole mission, is just to provide value. For example, when we do events, we're not focusing on ourselves, but we're bringing people together in order to provide them opportunity. So I think that's, one of the amazing things with, community VCs, with the crypto space in general. It's a very co-connected space, and I know there's a lot of danger and FUD and risk and everything with, the comparison to gambling at sometimes, but you've got to take a risk for what you love. And I think, as Adam said, it's like one big family in that respect, which I love that. And I think that we should all move together towards that, because the more that people work together in this space, I think the more that it really filters out all of the, excuse my language, bullshit that we see on a day-to-day basis.
Completely agree with that. Completely. Moongate?
Yeah, I'd just love to add on. I think your team, your investors, as well as your community, are sort of your backbone, and what kind of helps you get through these times in the market. And I think as we navigate through, I guess, like the bear market, and it's really important to remember that sometimes like these challenging times could be often the breeding grounds for innovation and transformation. And while we go through, like, regardless of any industry you might be in, there's going to be sort of peaks and valleys. And I think what history shows us is that some of the most like enduring companies are born during these sort of downturns. And it's just time for us to sharpen our focus and for projects to really kind of hunker down and refine like our strategies and whatnot. And also, thank you so much for having us on the space today. And, if you guys are at ECC, love to connect with all of you guys.
Awesome. Yeah, we'd definitely love to connect. And thank you guys for taking the time out for the space. Hope to see you guys next time as well on next week's space. We do this every week with ex co-host as well. So yeah, excited to speak to you guys soon.
Thank you so much.
Thank you so much, everyone. Have a fantastic day.
Bye.
Thank you so much.